There's an assumption that's unsupported. It may prove to be supported, but at the moment it is unsupported, that some of these businesses either wouldn't come to Maine, wouldn't stay in Maine if they didn't have this opportunity to take advantage of these tax breaks. And we simply don't know. And in fact, there's anecdotal evidence at a minimum that it's simply not true. Simply not true. And so we're operating in an information vacuum, and that's very dangerous when it comes to establishing policy.
Right. And
what drove the creation, as I understand it, and please jump in if I am misstating, but there was a $40 million shortfall, and there was a decision made that this tax expenditure review task force would be created to find $40 million in savings or in new revenue, either by recommending that some of these tax breaks be eliminated or by recommending that the sales tax be expanded in one fashion or another, trying to find $40 million. And if we were unable to, and even if we did and the legislature chose not to act on the recommendations, that the $40 million would be found to fill that budget gap by further reducing revenue sharing. In other words,
to
increasing
municipalities.
That's right.
That increased property taxes.
So that was the that was the impetus, as I understand it. There were 5 other charges that came along, and I won't read them, but they had to do with evaluating the expenditures that provide a benefit to business and trying to figure out which ones have highest value, reviewing best practices in other states, and we had Pew assisting us in that effort. Determine the purpose of each expenditure and the data that would be required to evaluate it. So we had some discussion about that. Prioritize the tax expenditures, and particularly with regard to those that reduce necessities of life. And then lastly, to develop a process for ongoing evaluation.